Hello traders, how are you? Vladimir Ribakov here from Traders Academy Club, and welcome to the weekly Forex forecast for the week starting of 17 until the 23rd of March 2019. Before we begin, thank you for your time watching this video. If you are new to the channel, I invite you to subscribe and allow the ring notification so you are notified by any video or content I upload to the channel. I would like also to invite you to join me in my free Telegram channel. To do so, please follow that link in the description. On Monday, I will be publishing the weekly forecast PDF format, so a summary for this video. So just come back to the video and you would find the link for the PDF in the description under the video. If you enjoy my video, please show your support back, hit the like button, leave your feedback in the comment section. Your help is my motivation to keep doing this content for the channel. So let's begin. As every single week, we start with going over the previous week review, reviewing the previous week and updating, upgrading, changing the trading plan accordingly. Before we do start that, I do want to cover the fundamental view because this week is very important. We have the monetary policy meetings on Monday in Australia. We have the average earnings in Britain, Parliament, Brexit vote again, and it starts to grow up with the interest on Wednesday. The FOMC statement, economic projections, and the cash rate decision. The expectations are for the Fed to keep it unchanged, but who knows how that will turn out. GDP in New Zealand, unemployment change, and the unemployment change in Australia. Monetary policy in Switzerland. Then we have the retail sales and the monetary policy in Britain together with the cash rate decision. Basically very serious week, and also the European Economic Summit on Thursday. Friday, if that's not enough, we have critical data from Germany and the CPI and core retail sales in Canada. So let's start. This is the PDF I was referring to before. That's what you would get on Monday every single week. We prepared that and we follow our plan to see how it turned to be in real-time trading. So pound dollar, our goal was to buy, and there were several ways that the pair could have react to the news we experienced the previous week with all the every single day changing opinions. Yes Brexit, no Brexit, yes delay, no delay, postpone, blah blah blah. Every single day there was something new, but the bottom line was look for buy opportunities. And two ways, actually three ways, the pair could have been following. And the first he did was simply straight move up. Well, with some reactions they followed it, but general direction was bullish. Now this was one of the options, straight reaction from the 38.2 Fibonacci level, two waves down on the 4-hour or structure. So what turned to be the reality is single shot, right? Boom. So the biggest question is what do we expect from here? My personal view was and will remain bullish. The reason I am bullish is the way that it's structured on the monthly chart, on the weekly chart. Apologize, that could be a special cycle or triple cycle. We have the higher highs, higher lows for bullish cycle view, double wave down with a false breakout and bullish divergence. And basically the way it looks right now, the continuation is here. As long as this is the structure that the pair has, higher highs, higher lows, my personal view is we are going up. So yes, that definitely retraces could be offered. Yes, retraces could happen. Everything would be correct. But the general direction was and will remain, from my point of view, bullish. So I would be looking for bullish setups and buy trading opportunities during this week. For all those of you who are holding this beautiful swing trade already for a while, the direction remains the same. The next pair in our list is the euro versus the pound. Now for the long term we were and remain bearish. This is our trading, right? The triple cycle from the weekly direction, meaning we are after two waves correction. Of course, that could fit also in a longer term range, but we do still see the room for the pair to continue lower. Our idea was look for sells that could be in two variations. After corrections, we were expecting two waves or a wide ranging pattern, and look for sell continuation since then. And what we faced on the 4-hour chart is exactly that. The noisy, right? The very noisy range we were talking about, and basically our direction was and remains still bearish. So the plan is still the same. Every rallies for the short term, okay? Because for long term, for all those who are holding, these corrections are not to be changed. Okay, I mean, they are not to change the main direction. So for the swing traders, the direction did not change. We don't have anything to do. Definitely good place to make some partial cash outs from my point of view, as we are fighting here the critical cycles and zones from the daily overview. So corrections are welcome to happen, but the general direction remains bearish. And for short-term traders, the plan would be neither we are to continue from here, but if we face corrections, the view always the same. Corrective cycle could be in this range, or corrective cycle could bring us to waves and then continuation. It's always the same structure for the corrections. So the main view was and remains bearish. It worked pretty nicely this week, and I'm looking forward to continue the main trend on the coming weeks as well. CAD franc, our plan is bullish. We were wanted to see a bullish rally from here. CAD franc. So here we are. We did see some bullish run. We do face the correction now. So the biggest question is what's coming from here. The CAD franc could definitely hold this level and go and fly, or also maintain the short-term correction, meaning to reach one more low and then looking for the buys. This or other way around, look, I'm looking only for bullish setups. So yes, this becomes as a possible scenario with some bullish divergence, right? And then bullish run. But if the area would hold, we can definitely see it going all the way straight up from here. So the bullish plan was and remains the same. Aussie versus the dollar, our plan is also bullish. We are looking for the buys. This was one of the suggestions to see the reaction from the 4-hour chart, and the 4-hour chart really does follow these plans. So the biggest question, would we manage to break through the daily trend line for the longer term continuation? Break above that and we are after long-term buys. Meanwhile, we can still play here for a while, or maybe even try to push lower, but the general direction will remain bullish for us for one simple reason. Look at this monthly chart. This is a special cycle, false breakout, bullish divergence, massive kicker, and a couple of months ago, beautiful candle pattern for the long term. And on the shorter view, also bullish divergence, building up, right? Two wave cycle. So for us, we are only after buys. The buys could happen with the break of the daily trend line, or simply with one more low and then a shot to the upside. The next one on the list is the Euro versus the Aussie. The plan for us is bearish, meaning looking for sell setups. It didn't really change this week much. Pretty much doing the same, holding the same range, right? Now this becomes a little bit suspicious, as it is a small range within the bigger range. It might turn to be a bit suspicious, and here is why. Because according to such patterns, the daily could simply break through the this little range we just covered, right? Which we have, this is the little, this is the big one. So it could break through the little and go all the way down, but on the same time could try to make some kind of movement here, some fake breakout, and then go and drop. So for us, we are looking in such structures for sell setup, neither in the current levels or with one more fake spike to the high with bearish evidences like false breaks, bearish divergence, bearish clear candle pattern structure, and looking for the sell setups. Next one on the list for us is the euro versus the dollar. Now this one I am bearish, and I am bearish as long as this top would not break. If it breaks, we can start looking to buy retraces, basically a deep correction for this double cycle. If it does not break and holds this structure, okay, so as long as this one holds, we could be looking for sell setups. And for that to happen, we can go to the 4-hour chart, make that double cycle come and complete itself, right? Come closer to this trend line. And from this area, the massive area, start looking for possible reversals and sell opportunity. Okay, so it's very, very important to see how exactly it develops from here. The level is critical. A few things to be, of course, decided this week with the Federal Reserve, with the news from Germany, with Brexit votes, and so on. Too many factors that will change or not the current direction of the euro dollar. So this one, keep attention. It's very, very interesting. Now pound yen failed for me previous week. I was looking for one more drop down. Now it did happen this way, but that's this way, but that's not what I was looking to see. I was looking to see one more low being reaching with ideally deep correction for this cycle. It didn't happen, so my personal view fell here. I also failed my trade here. Sorry. And right now there is nothing too obvious and clear from my point of view. The levels still critical. We still have this area where we could see that going up and making our sell opportunities from there, or the really critical zone would be slightly there, but it's far away. So I would be paying attention to see what will happen around the area of 150, surrounding it, right? We might get that happen pretty easy. The divergence is building up. It does look good, so we shall see how that builds up. There is a very good chance we would face something like that for the pound yen. Currently, at the beginning of the week, it's not so clear. It might get more beautiful during the week, so keep an eye on this one. Next one was the euro versus the yen. I was looking to see the sell the rallies plan. Once again, didn't work out for me. That was my view, an idea. Now I'll show you personally where I was attacking my trade. So this was a trend line, this was a bearish hidden divergence. Everything looked simply perfect here. On the 1-hour chart we got this trend line breakout, even we got the lower low structure here, but the market didn't agree with my idea and I had to accept a loss for this position. Honestly, at this stage for me, totally not clear. I don't know, I don't see any view here, so I don't know. I would say I'm still bearish, but really I can't define anything. We are currently slightly above 61.8, neutral. When I don't have a clear view, I prefer simply not to deal with that. So the next pair basically would be new pair before I go to the commodities, and I have the New Zealandian versus the yen. Very interesting one. I do want you to pay attention to the critical levels we are approaching. This is our zone, very, 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 very good zone. 78, 77, 78. This is the place. So if the New Zealandian yen could achieve this area with this divergence forming and expected to basically complete there, I would be looking for sell setups from the coming area. It doesn't mean I will sell any price. I do want it to reach this area. It does not mean I'm looking to buy until then. It means if it reaches this area, I will be looking for bearish evidences. False breakouts, turning a lower lows, lower high structure, clear candle pattern structure on the weekly and daily formation, bearish divergence to complete, of course. All that would be great signs to start looking for the sells. And the next one is the euro versus the kiwi. Also very, very interesting pair from my point of view. It does suggest us the structure of triple double now, which I like, and I think this pair is getting ready for a flight. So there are two main levels to pay attention to that. First one, let's go back to weekly since we are talking about weekly cycles. The first level is the current level. We might see that flying. The next level would be slightly lower and then fly to the upside. So from my point of view, we should get ready for possible buys. What I would want to see happening before the buys is, first of all, the trend line to be broken, and second, the higher highs, right? So if that happens, we are after beautiful buy setups. If not, then we might be facing here a new false breaks, but still higher highs, and then look for buy retraces. So this is the view as I have it on the euro versus the kiwi. It starts to be very interesting. It's not for short term, as you can see. It's not like for few days. It's more like for several weeks plan. But definitely great combination started. So I start to share it here, and we will be following to see how does that proceed further with this pair, how it develops, and where come our setups to trade. And that's all from the Forex view, and now we are into the commodities. Gold and silver, we had two views. One, we are going for two waves correction. Second, we are going to trade in a range. Basically, both scenarios are still possible, still doable. We have that, so we still might be facing the second leg, or we still might be playing inside the range. So short term sell the rallies could be still a plan. For the longer term, we would be looking for this correction to finish, and then basically buys to continue. Same exactly we have for silver, two waves or a range. That both scenarios are pretty much the same. Let me just find some here. This is the silver. So again, we neither have 1, 2, or we are dancing inside the range. Both scenarios would be acceptable. Short term sell rallies could be good. For long term, definitely buy the dips. This remains the same. New commodity adding to the list. This is the oil, which starts to be interesting. We have beautiful magnet area around the psychological zone of 60, as you can see here. Critical zone. Divergence building up for a while now, right? Looks good. So what we would want to see is basically the turn around, and we would be looking for sell setups from this area. By ideal, the setup would be something like that, right? Fake breakout, lower lows, and retraces. Oops, sorry, right? Or of course we can start to see triple high, triple low, and then sell the rallies plan. Okay, this is for the oil, which also is very, very interesting. Dollar index. Here we are. We wanted to see the trend line breaking, or it is completing the false breakout. Let's go to the index. And here we are, right? We do complete a fake breakout. And this is the weekly trend line to be broken. This is the daily trend line, and it's almost broken. So it's pretty much, as you can see, a mirror to the euro dollar, which makes sense. Euro dollar is about 70% or so from the impact it has on the dollar index. So it's pretty much mirroring. Break below, and we can start to sell the rallies. And it definitely starts to be interesting one to follow. And indices, we have our, New Zealand CAD also was an addition from previous week, and my view was, where is that? Here. My view was look for rallies and continuation, so drops and continuation rally, sorry. New Zealand CAD, here we are. So we did have the move, we did have the correction. I still would not be surprised if we see the rally. My invalidation would be here. As long as we hold, I think we are going up and then down. If we do break below that, then it changes the game and we start to be bearish. But meanwhile, buy drops is still the plan, the same. DAX, I wanted to see the break below the last low. Unfortunately, at this stage, didn't happen yet. Here, well, almost happened here. Didn't happen yet. So basically, we are still in the daily correction variation. Here we are dancing around the 100 as a next level, right? This is a critical clearance, so by ideal we clean that, and with the next divergence to form, we are becoming bearish. So sell the rallies with bearish evidences would be our plan. And the one that failed for me personally big time is NASDAQ. It had a perfect technical setup. Here, this was a perfect technical setup. All the convergences were leading to the conclusion we are going bearish, but you can see yourself what happened with the chart. That's a proof that it doesn't matter how good we analyze, how well the techniques we might have, sometimes Mr. Market would not agree with us. And I was talking about it in my live trading rooms during the last week. These are the moments that separate the real traders from the wannabe traders. What am I talking about? Most traders would fall in love in the idea and let it run with the hope it will be fine. Pro traders would cut it as they get the signs against. And the idea was to sell the rallies, but look how sharp the rally is. It goes through all the Fibonacci retraces. Boom, within one shot. This is a suspicious sign from the market. When you face something like that, be careful. Okay, that's what we have. So what's next? I am still very bearish for the long term. I just don't have any setup at that moment. That means I become neutral as for now, looking for the next possible setups to form. It will take a while, so patience would be required. So for me, I simply remove this one from the list at this stage. So that's all for the coming week. We have several very interesting opportunities. The best thing on the last week were the pounds. They paid beautifully. Few failures with the yens and the NASDAQ, yen related, right? For all those of you who love the correlations between the yen pairs and the indices. And it looks like this week there are several more interesting opportunities forming, and we can go and look to trade them. So thank you very much for watching. I invite you to join me in my live trading rooms every single day. To join, just follow below in the description, follow the link to Traders Academy Club, and I hope to see you inside. If you enjoy the work, please hit the like button, share your comment in the comment section, and if you feel sharing this video with anyone that you think might be helpful to, please go and feel free to do that. Thank you very much for your time watching this video. I'm Vladimir Ribakov, Traders Academy Club, and I'll see you around. Bye for now.